Hey, folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Thursday, March 8th, 2012, is sponsored by Realtic. All right, folks, we're going to take a look at this market on an intraday basis, and again, another update, two updays in a row. And the interesting thing about today's day is that we're ultimately reversing the previous major down day we had on Tuesday. And you can clearly see that we had this monstrous 200-point drop on the Dow yesterday, and today it is now negated. This was the gap fill. See the gap fill right here in blue? That was gap fill from that ginormous down day. And again, the last 2 days have now taken that away as if it never even happened. Now, what's this doing? Well, it's creating even more of a bullish sentiment. Oh, the market can't be taken down. Here we are right back negating that big down move. And it's getting the amateurs, the media, the analysts on TV very, very bullish. What does this do to me? It keeps me on high alert. High alert, folks. And you have to look at the charts and understand why. First off, you understand that off of the high from the 29th, and again, this is the high from the 29th. I can erase that trend line. This high right here, folks, that is your high pivot. You dumped, and now this is all inside action. And again, understanding inside action is one of the keys to making a lot of money in this market or in any market. This is right now, as long as it doesn't take out this pivot high right here from the 29th of February, all inside bars, which can be considered slightly bearish. Now, again, let's be clear on this. Should the market rally and continue to rally over the next few days into next week and take out the high at 138.20 on the SPY, which mirrors the S&P 500, then that bearish case is off the table. However, with all the little amateurs out there and retail investors and media getting all bullish and crazy on this market, we have to take it with a grain of salt. So again, I'm here to give you guys that insight to let you know you want to be a little bit on the more cautious side. And again, be aware, go here, be ready for the market to dump out again as long as it stays underneath that 138.20 level. All right? And again, that's really the key there, what I wanted to point out here to start the video today. Interestingly enough, I love the levels. These levels on the chart, folks, are just awesome. The levels I give my members in the intraday stock chat. This orange trend line, that was the low. The blue was the high in the beginning of the day. Why was the blue the high? And why was that resistance? Because it was gap fill. So we hammer on gap fill to start the day. That's resistance. You look for a pullback off of that. The market pulls back. Where does it go? It goes to the low pivot from that same day. That's going to be support. 200 moving average is also there. Then you reverse back up, go to the blue line, pause, bullish consolidation, break through, go to this pivot top, and then you're pulling back to the gap fill. Do you guys see how the market literally is finding its way to each of these trend lines as if I know the future? And frankly, I don't have a crystal ball. All I know how to do is read the charts, find the levels, and trade off of them. Okay, and again, Dow right now is up 61 points, NASDAQ up 30, S&P's up about 11. And again, we have negated the entire down move from Tuesday, but we have not made new 52-week highs. And I want you guys to really remember that. Going forward, as long as we're underneath that, keep on a little bit higher alert than you would be normally in this market. Because again, I see a lot of amateurs getting very bullish again after that one big down day on Tuesday. And now Wednesday, Thursday, again, negated. And they're just ready to jump back in. They're ready to dump more money in the market. They're thinking new highs. And of course, the media is perpetuating that by being so, full of hype and everything. All right, what's some stocks? What are some stocks making moves today? Apple Computer, Apple Inc. Great move here, up $10. It's just had a little bit of a fall here over the last 10, 20 minutes. But bottom line is Apple continues to rally up. It's not back to the highs on the daily, though. The high daily resistance is going to be here. I actually have a master level above this, which members at InTheMoneyStocks.com know about. And by the way, if you're not a member and you want to start getting involved and you want to start making the money that our members are making when the market goes up and down, then you take the 7-day free trial. 7-day free trial at InTheMoneyStocks.com to the Research Center for Swing Traders. Again, that's the Research Center for Swing Traders and the Intraday Stock Chat for day traders. All right? And that's really the bottom line there, and you want to be aware of that. All right, now let's take a look at a couple other things here as we look at the charts. And again, going here to some various other charts on the day. You have J.P. Morgan. Now, J.P. Morgan's kind of intriguing to me, and I want to explain why. And again, I think you can look at the intraday chart and understand why exactly as well. But again, notice how JPM, while the market's still pretty strong, J.P. Morgan is just up 33 cents and is fading pretty nicely. Now you're making another bear flag on support here at the 50 moving average, maybe downside to the 200 or gap fill. But again, a leading stock right here is not behaving properly. All right, leading stock, I repeat, not behaving properly. In addition, take a look at Exxon. Exxon's down 88 cents on the day. Not behaving. This is another major Dow component, and it's not behaving well either. So again, there are little things like this that are kind of piquing my interest as well. So not only did I bring forth today in this video the fact that as long as we don't take out that pivot high from a couple weeks ago, the 29th of February, as long as we don't take out that pivot high, you have to be a little bit more careful here. But also leading stocks are not behaving. I mean, obviously Apple is. Apple's having a great day. But there are other stocks that are leaders. And again, Apple's in its own world. It's going to trade in its own world. But the other leaders as a whole are not behaving as well. All right, I showed you Exxon. I showed you JP Morgan not behaving that well. Goldman Sachs is another leader. Just up 2 cents on the day near the lows of the day, was just negative a few minutes ago. Now, what about a technology stock aside from Apple? How is tech doing aside from Apple? Well, one thing catching my eye is Intel. Intel negative on the day. So again, folks, be very aware here as we go into the next few days into next week about the weakness we're seeing in large cap major leading stocks, as well as the fact that you're technically all inside bars from the drop, which is known as in spirit of bearish consolidation on the bounce back. And remember, it's very hard to kill a bull, and I want to make that clear as well. You know, you're going to have bull bounces all along the way. Nothing goes straight up, nothing goes straight down. But just be aware. That's what I'm giving it to you right now. Hopefully you take it and make use of it by joining the 7-day free trial here at InTheMoneyStocks.com and actually profit with the elite traders here. All right. What else am I looking at? Let me just take a look. I'm seeing MasterCard up about 5 today. Microsoft's up 23 cents. Pretty weak day on Microsoft as well for the NASDAQ being up as much as it is. IBM's having a good day, back to almost the 200 level on IBM. I will be keeping an eye on IBM for a possible short. I do think, again, if it gets above 200, there's a key level that I gave my Research Center members as well that we're looking for should it get there. Okay. Scanning through, let me see if there's anything else on the radar here. Let's just go back to the spiders and take one last look. And again, this is the daily chart of the SPY. You can see the drop off here and then the bounce back. The other little point out I just want to make as well, folks, you see the pivot high from May 2nd, 2011. And again, we were above it, but we never confirmed. And confirmation is a proprietary signal here at InTheMoneyStocks.com. But bottom line is, you never confirmed above. You fell back. And notice how the spiders ran right up underneath that line and still can't get above it. So keep an eye on that 137.20 level as well. Whether or not we confirm above it would be very big to me in terms of where this market's going as well. As long as we stay below, again, I'm very conservative, very cautious here in this market. All right, guys, again, there is a key thing happening with Greece tonight that's going to be big, and then we have non-farm payrolls tomorrow morning. That's going to be a very, very big thing. Analyst estimates are right around the 200,000 marker. I do think if that number comes in weaker, you should see a little bit of a sell tomorrow. If it comes in stronger, they may float this on a Friday and keep it up and continue to kind of float it up. But again, I'm skeptical that they're going to be able to take out the 52-week highs at 138.19 on the SPY. All right, guys, take care. Have a great rest of the afternoon. I got to get back to making money with my members here. And again, we encourage you to come take the 7-day free trial here at InTheMoneyStocks.com. Remember, Research Center is for swing traders, and day traders focus on the intraday stock chat. Take care.